Well, hello again, everyone. Welcome to the Options Mentor. All right. Well, we have a week coming up that should be interesting. Apparently, we have averted the government shutdown. They passed a continuing resolution that'll keep the government open now for more game plans until like November 17th. So I have two different ideas based on the market's reaction to that. I think it's possible it could have a bullish reaction to it. Or who knows, maybe it won't think much of it at all. But I think whatever comes out of it would probably be probably tomorrow morning, we could see what it was about. But before we do that, I'm going to go ahead and share my screen here. I want to show you one thing I like to look at every week, right at the beginning of the week, and sometimes even the week before to get an idea, is I look at some kind of an economic calendar here. For example, is the Market Watch economic calendar. There's a lot of different economic calendars. You're just looking for something that tells you, when Fed speakers are speaking and all the various reports that come out, as you can see here on your screen. I don't think there's much here this week. It's not like we have a Fed meeting or anything as far as scheduled reports, other than Friday, when you have the non-farm payrolls, the first Friday of every month, and you have like the unemployment rate. Sometimes the market has a reaction to that. I remember periods in the market where it was huge. That was like the Super Bowl of things. Is what happened once a month with the employment report. But lately, sometimes it has more effect than others. Just things for you to be aware of that are out there. So here's a couple of different ideas I had. So I'm going to share my screen again here. First, I want to talk about what if the market has kind of a nonplussed reaction, really doesn't do much at all. Maybe goes up 20, 30, whatever, not a whole lot. And what I would probably do in that case is you could consider a butterfly. In this case, this is a short-term butterfly. Now, those of you who know this channel know I prefer long-term butterflies, 35 days and up. But once in a while, if you want, you can try these. I would do these smaller than your normal size, but they can still work very well. The good part about a short-term fly is that you get your theta faster. Now, the bad part is you can kind of get in trouble on the edges a little faster than, say, a fly with more duration. But what I did is I just used Friday's closing number, 42.88, and I just centered this fly at 42.90. And then I went up 60, down 70, which we call an asymmetrical fly. So at the upper break even, you're down about $130. At the lower break even, you're up about $30. That to me is fine. I like a little more protection on the downside. This is short Vega. Could make it even be a little worse sometimes. And up here, since we are short Vega, volatility probably went down. It might not be down quite that much, but at either of these edges, you could always adjust the trade if needed. And what I would try to do with this trade is I try to get 8 or 10% and get out. Now, I would hope to be out by this Friday. Now, this is for the 13th, so it's 2 weeks from this, or a week from this coming Friday. But if you can get out at even 7 or 8% on Friday, I would go ahead and take it rather than go into expiration week with the trade, which sometimes can be a little difficult. Now, let's talk about another scenario. What if the market really does rally up big? Right off the bat, maybe goes up a lot during the day and volatility drops. Maybe we go down, 16, under 16. We close the day Friday at 17.5. Well, in that case, what I would do is I'd wait till later in the day and then maybe put on a calendar wherever we're trading at the time, right? So if we're trading around, I'm just going to use Friday's close again because it makes the graph look more, understandable. But so wherever we're at when you decide to do this, and remember, this is if the market goes up a lot, volatility comes down, then I would throw a calendar on for the same expiration. So a week from this coming Friday, the 13th, buy your long 3 days later. Because the reason I would do that is volatility dropped. I don't mind getting long Vega. Getting long Vega at 17.5, you can do. But I like it a little better if we could be just a little lower. So this would be my trade. If the market goes up and volatility comes down a bunch, then maybe, sometime in the last 2 or 3 hours of the day, put yourself on a calendar like this. And once again, same plan. Try to be out of this thing by this Friday. Even if you could get 6, 7, 8% by Friday, I'd probably take it rather than go into expiration week. Now, if for some reason you're not up much at all, yeah, go ahead and take it into expiration week. It's okay. but that goes for both of these trades. But that is a couple of ideas based on different market scenarios for you. As always, please tell your friends about this channel. I appreciate everyone that subscribes, likes the videos, comments. Guys know I get back on those comments with you. And I look forward to putting out a lot more education for you guys here. So you see, what I do every day in my mentoring job over at CharityMentoring.com. So this is just another avenue for folks to start learning options education, because in options, it's very important that you get educated correctly. You don't just follow just anything you see, and you get someone with a proven track record like I have and like we have. So anyway, I will talk with you guys again next week. Let me know in the comments what you think. Have a great weekend. And hey, in this case, I'm going to have to say it. My Vikings are 0-3. They're playing another 0-3 team today. Go Vikings. Have a great one. Bye-bye.